You ever wonder what really separates the traders who consistently make money from, well, from everybody else? I'll give you a hint. It's not some secret indicator, it's not a crystal ball, it's something way more powerful. And today, we're going to dissect it piece by piece and really get into the anatomy of a solid trading plan.
Okay, but first, let's start with a pretty sobering reality check. According to data from India's market regulator, SEBI, a staggering 93% of retail traders lose money. Let me say that again, 93%. That's not a typo. The vast majority just don't make a profit. This really underscores why having a plan isn't just a nice idea, it's an absolute necessity.
So that brings us to the big question, right? If 93% are failing, what on earth are the other 7% doing that's so different? Well, the answer is pretty simple. It's the difference between gambling and actually running a business. They have a plan.
Think about it like this. An architect would never, ever build a skyscraper just based on a gut feeling. A pilot is not taking off without a flight checklist. You see, professionals rely on blueprints, on procedures, and in the world of trading, that blueprint, that's your trading plan.
So, what is a trading plan, really? At its core, it's your personal rulebook. It's this structured, predefined framework that's designed to be your shield against all those emotional traps. You know, the fear of missing out, panic selling, all the stuff that sabotages so many accounts. It just systematically removes guesswork from every single decision you make.
So, any really strong trading plan is built on 4 core pillars. First, you've got to identify the right setup. Second, you define your exact entry trigger. Third, you master your planned exit, and that's for both profits and losses. And finally, you have the overarching rules that govern your mindset and your risk. Let's break these down. All right, first up, let's talk about decoding your entry signal. This is pillar 1, and this is where we really shift from just subjective hope to objective hard criteria. Your plan, not your gut feeling, is what tells you exactly when it's time to pull the trigger.
And here is the key difference, you guys. A professional doesn't get into a trade because it feels right. No way. They wait for a specific set of predefined conditions to line up, almost like tumblers in a lock. Their entry is the final result of a rigorous, factor-based checklist.
Now, what's so interesting here is just how concrete this can be. A trader's checklist might literally ask, is the bigger market trend in my favor? Check. Do I have a confirmed full green candle on the chart? Check. Is my short-term momentum indicator bullish? Check. You see, every yes is another confirmation, and you're literally building a case for the trade before a single dollar is ever put at risk.
And this just brilliantly illustrates the professional mindset. The decision isn't just a simple yes or no. It's all about conviction. You know, if only 3 out of 10 of your factors agree, okay, maybe you take a small position. But if 8 out of 10 agree, well, then you can enter with so much more confidence and probably a bigger size.
Of course, getting in is only half the battle. A professional plan has to be just as rigorous about getting out. Every single entry must have a predefined exit strategy, and that's for both winning and losing scenarios, no exceptions.
You know, you really only exit for one of 2 reasons. You either take your profits based on strength, meaning the trade worked out, it hit your target, awesome, or you exit based on weakness, meaning your initial idea was just proven wrong and you cut your losses to protect your capital. And here's the key. Both of these are planned before you ever even enter the trade. So your plan should link specific triggers to specific actions. For instance, if the short-term trend suddenly turns neutral, the plan might say, okay, take some partial profits off the table. If the price action turns decisively bearish against you, it commands a significant or full exit. The beauty of this is that the decision has already been made for you. There's no hesitation, there's no second guessing, just execution. And that brings us to the final and, arguably the most important part of a trading plan. And it's not about charts or indicators, it's about the rules that govern your mind. This right here, this is the ultimate edge.
This quote from our source material really just gets to the heart of it all. See, the 93%, they're chasing that one big score, that one lottery ticket. The 7%, though, they understand that trading is a business. It's a business of probabilities and consistency, and it's managed over hundreds, even thousands of trades.
A professional's plan is all about patient, step-by-step progress. Instead of trying to get a 100% gain overnight, you might start by targeting a realistic, say, 10% annual return. And once you can do that consistently, okay, now you can build to 14%, then maybe 16%. You let your skill and your confidence grow together. Because ultimately,
Long-term success isn't about hitting home runs, not at all. It's about consistently hitting singles and doubles, day in and day out. It is all about the power of compounding small, consistent, and repeatable wins over a very long period of time.
And that leaves us with one final thought. Take a hard, honest look at your own approach. Are you just buying a lottery ticket with every trade you make, hoping for that one life-changing win? Or are you executing a well-defined business plan that's designed for long-term survival and growth? The answer to that question will probably determine which side of that 93% statistic you land on. The choice is yours.